Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Joseph here for the tackle trading market recap video for the 12/28 Monday. That is Monday the 28th of 2015. My last market recap for 2015, and not to say it's a boring day in the market. It was actually quite interesting, even though it's to be expected on very low volume out there in the market. But it's going to be an interesting week as we don't have a lot of economic reports this week. Going to be on light volume. Expect really kind of not a lot of movement in the market. The interesting day that we had in the market was really kind of driven earlier by oil. And as you can see, initially the marketplace was coming down, and that's because in crude oil, you had some information coming out, and as you can see, crude oil was coming down, and really kind of impacted the energy sector, the basic materials sector. A lot of movement to the downside in those two sectors was driving the market down. However, if you come back to the S&P 500, whereas crude really didn't come back up, even though you did finish on the red in the S&P 500, you still had this upward movement back up in price, and that's a positive sign coming into the end of the year. Although again, anything can happen on relatively light volume. Currently in the market, I personally have a neutral bias in the market as support right here at 2,000 is really kind of holding firm at 2,000. If that is broken, I will switch to a slightly bearish bias, but we do have some decreasing short-term resistance. As you can see from this downward movement in price, you have this decreasing resistance with the horizontal support level at 2,000. That is putting pressure on price to come down. One thing has to happen in the near future. The one, it's got to go back up, and if it breaks this level, it should come back up into the 2,100 fairly quickly. Or if it doesn't and it holds, look for that to come down and retest the 2,000 level. Now, interestingly enough, I did give a prediction at the very beginning of this year that the S&P 500, which is what we're looking at right here, would finish slightly below, just a hair below 2050. And oh my God, after 362 days, we are hovering currently at 2050, right where my prediction was slightly below that level. So you know what? I feel like it was a pretty decent, pretty accurate prediction, but I still want it to finish just from a pride perspective. I'd like it to finish under 2015. 2015. So we'll see kind of what happens throughout the end of the year here. So a neutral bias on the S&P 500 with not a lot of economic reports out there in the market, with a very low volume in the market. Do not expect anything major this week. I do not expect any movements in either breakouts or breakdowns to be sustained until we get into next week. And next week we get into the first week of January, which is the unemployment week. We also have manufacturing. We also have the Fed minutes from this recent interest rate increase. That's the week I'm looking at for any major movements for the future of the market. January is also a very big predictor of all market activity throughout the rest of the year. So that's kind of where I'm looking at in terms of any major movements this week. I think we're going to fade one way or the other, kind of just hang out, as you can kind of see what happened today and so far what has happened in the market after the market is closed, with the little doji that we've had just kind of hanging out. Now, a couple stocks in the news very quickly before we look at the other indexes out there. First and foremost, Pep Boys, and Pep Boys symbol is PBY. Pep Boys, there is an announcement today that Carl Icahn is going to purchase Pep Boys at $18.50 a share, and as you can see, that it was accepted by Pep Boys officially. They still got to cancel contracts with Bridgestone, but as you can see, it jumped up, spiked up in price to $18.65 before hovering right now, literally right at about $18.50 a share, which is exactly where the Pep Boys price is. Nothing you can do about it right now. Just wanted anybody who is an investor in Pep Boys to be aware of that. You also had some major news come out today, and this is something that I've been talking about quite recently, that Saudi Arabia in their war on oil against the entire fracking world out there, their war on oil is driving basically oil prices to the low side. But as I've talked about in recent podcasts and coaches shows and webinars and market recaps and whatnot, this war on oil is costing Saudi more than it's costing other people, even though it's been dramatic on others out there as well. Saudi Arabia is currently going into debt to pay bills. They're currently looking to cut pensions. They're looking to increase taxes just to offset their $100 billion loss that they're now taking for the year of 2015. S&P just cut their rating in October. It looks to be cut even further. And what I've been talking about here is this decrease in oil. As you can see, we're at nine-year lows here, currently at $36 a barrel, all the way down to about 34.53 at the very low of 3 weeks ago. Saudi Arabia can't maintain this forever. 75% of GDP of Saudi Arabia comes from the sale of oil, and at $30, $36 a barrel, a lot of people think they can maintain that, but they can't. It's putting too much pressure on their economy, and you're going to have to look at two things coming into 2016. Either one, Saudi Arabia has to cut production, which they're having a hard time doing right now, because, number one, because they're still trying to kick out frackers, and number two, they have to sell oil, and if they don't sell oil, they're literally going bankrupt here. So they're really between a rock and a hard shell. Do they cut production which will spike prices higher, but the rest of the world has a decreasing in demand due to recessions, or do they continually cut prices so people can afford cheaper oil and still maintain their numbers? Either way, it was a bad decision to increase a little over a year ago. It was a bad decision to go after the frackers. It was a bad decision to try to control the monopoly on oil. It was a bad decision to drive oil prices to the low side, and that has put the Saudi economy in very, very big danger zone in my estimation, and it's something that it's going to be interesting to see how they come out of that. But either one, you're going to have to, in my estimation, you're going to have to kill the petrodollar, which prices all oil in dollars, or number two, you're going to have to cut rig counts, cut the production of oil that you put out there to the market, which basically in a decreasing demand environment in the world will have an impact on Saudi oil prices as well. Again, I don't think there's a soft landing for Saudi Arabia. I'm really looking forward to 2016 for oil, though. As you can kind of see here, we got support right here at 42.30. You have support right here about 38, and you have support right here about 34.50. You're starting to see it kind of slow down on the movements to the downside, maybe on some type of double bottom in the marketplace right here. It could be an opportunity to go long on, even though I do feel there is still some downward movements in price in crude oil. Just wanted to update you guys on what I've been reading today about crude oil. The dollar index, another prediction that I had coming out of last year, and that was right here when the dollar was right there at 80. It was $89.90. Okay, right there. And basically, you had a lot of information going out there, and I basically said, okay, currently at $90, the dollar will be higher than $90 coming out of 2015. And as we expected, the dollar rose throughout the majority of the year, especially early on in the year, and currently finished in the year somewhere around $96 to $98, depending on what the last few days does. And I do expect that to continue to move upwards in price on the weekly charts. Let's look at on a daily chart, though. It's at the low points on a daily. I was looking at being a buyer right here. Right now, I'm a little cautious with the dollar on short-term projections. You do currently have a decrease in resistance from 100 down to 99. You have a support zone right here that you're kind of breaking a little bit of a symmetrical triangle, as you can see. If I connect the dots here from support to support, you're kind of breaking that symmetrical triangle on the downside, but it's not with any type of volume. It's not with any type of conviction. It's not with any type of a big movement one way or the other. And so I'm kind of a little cautious. I got a neutral bias right there. I was slightly bullish right here. Got a neutral bias on the dollar right now. For the rest of the week, I'm not going to really do anything aggressively. The Forex report will be coming out tomorrow morning. Got a mentor student in town, and we're going to go over that tomorrow morning and post that tomorrow morning for all you loyal members of Tackle Trading Pro membership. Now, gold, we're going to look at gold right here. Gold right here, I got a slightly bearish bias on gold as we got decreasing movements to the downside in terms of momentum. However, the longer-term trends still maintain that gold is slightly bearish. I wouldn't be touching gold unless it broke the 1050 barrier, or unless it broke up above the let's go a 1087 barrier on the way up or the way down. So that's on gold. Silver, by the way, on gold, my prediction coming into the year. Let's look at the weekly chart here. Let's go back to the start of 2015 right here. Gold at 1280. I said gold was going to be less than 1250 an ounce, 1250 an ounce, and currently gold at 2072. Silver at the very first of the year, I said silver would be under $18. It was $18.50 at the time. I said silver would be under $18. It currently is at $13.98. So on the predictions, fairly good. And the last prediction I gave was regarding the euro. I said you're going to still have pressure on the euro. It was currently coming into the beginning of the year at $1.20 against the dollar. It's currently at $1.10. And I also talked about how Greece was going to get bailed out despite all their situations. So from a prediction standpoint, pretty decent little year. The one prediction I don't feel I got right was the one on crude. I said crude and the market were going to correlate back together, which basically in a bearish market, my belief was that they would both go sideways. And at the very first of the year, throughout the midpoint of the year, the market and crude were correlating. Then crude really started coming down in the last 2-3 months with pressure being put onto the downside. So didn't get that one right, but you can't get them all right. Looking at this week in the market, looking at the heat map today, it was all red today at about 1 p.m. Eastern Standard Time outside of Google and Amazon and Disney. Okay, Disney, amazing. I've been asked a lot of questions regarding Disney lately. Why have they been going down despite the fact that Disney owns the world and Star Wars did amazing and all the yada yada yada? Everybody knew Star Wars was going to be amazing for a very long time. It's one of those things, you buy the rumor and you sell the news. Okay, and although I do like Disney long term, I think it's one of the stable companies out there. You can't be a buyer of Disney unless you've owned it for a very long time when you have an M formation or a possible cup and handle formation, which this could be forming with a little bit of a teacup right there with a handle right there. If it breaks out on top of 120, that might be another buy in a long-term trend, but that's a long ways away. I do like the company long-term for those of you who invest in it. Right now is the time to be writing covered calls on it. If it ever breaks support levels, buy insurance on it. Disney had a good day, up 1.37%. Google up 2.4% today. Amazon was showing a lot of movement to the upside today, up 1.87. They added, it was like 3 million new subscribers in December, in 1 week in December, to their Amazon Prime, getting better out there. Amazon really competing very healthy with Netflix right now in terms of increasing subscribers, and I think that's a good thing. Even though I don't like their P ratio, I do like streaming video online. I think it's got a lot of movement to the upside in terms of streaming video as they continue to dominate players like DirecTV and so on and so forth. So heat map a little mixed today outside of basic materials, which was largely driven by energy onto the downside. Outside of that, that's Matt Justice and Matt Justice family wishing everybody an absolutely Merry Christmas, Happy Holidays, and have an absolutely safe New Year's season. It's a blessing to be a part of Tackle Trading and everything that you guys bring to the table. Thank you so much from our family to yours. Merry Christmas, Happy Holidays, and have an absolutely safe and wonderful New Year's.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.